When to take profit on a trade. This is the topic du jour on this particular video. When to take profit on a trade. Well, so, as with all things, the answer is, it depends. However, it's not so ambiguous that you can actually figure it out. Fortunately, there are indications that let you know when to do this. The first thing is, when you're trading with volatility, entropy, probability, and statistics, you can see, by way of measuring, not only what your potential profit is, but what it is exactly. And so, you should know that when you have a major outlier, and your position is in a significant profit, and the asset has run up to a second or third standard deviation on your returns, and it looks like it's not going to repeat that on the current or next candle, and it looks like it may very well turn around, and the returns may start to mean revert, that is a good indication. Another indication is when the volatility, for example, has fully expanded or fully contracted, and the correlation has fully expanded and fully correlated, either way, and the move is maxed out on volatility, one way or the other. Typically, within one or two candles, it's usually a good idea to take profit, especially if you're trading on lower time frames. Why? Well, because you will have more capital in your capital base for trading for the next trade. It doesn't matter if you don't get the continuation move, because whatever extra percentage it may go, you could just as well have by repositioning and re-entering a trade with a bigger position. Even if you miss some small percentage of the continuation, again, it doesn't matter, as long as you have more capital in your capital base with which to trade. Similarly, if you're trading the trending move on entropy, when the entropic trending move ends, that is typically a good place to take your profit. How do you know when it ends? Well, you see that very clearly on the entropy indicator, if you know how to read it. If the entropy has passed the third standard deviation band and begins to turn around, take your profit. Could it turn back and continue in the trending move? Yes. Can you also re-enter a position to join in on the remaining trending move that it will make? You certainly can. Perfect example yesterday, when Bitcoin went from 47K to 50K, with a couple of stops along the way, you could have taken profit at 48K, taken profit again at 48.5-ish, taken profit again at 48.75, and also taken profit again at 50. That would have been 4 trades you could have had, all on a trending move on a certain time frame, but that was on random walks and trending moves on other time frames. So the key is to, of course, look at different time frames in order to make sure that you're not missing occurrences of opportunity on the asset you're actually trading actively. You're never going to get every move, and you're never going to get every move on the market. It's statistically impossible. right? There are billions, if not trillions, of trades happening every day. And high-frequency trading firm algorithms run millions of trades per second. You can't, whatever amount of trading you're going to do is statistically negligible, like 0% compared to whatever they're trading. Therefore, don't try to catch every move, and don't try to sit in the move to catch every last possible penny, when in fact, you're more likely to get more profit on the day by taking trades up and down than just by sitting in one trade. So those are some ways, not the only ways, but certainly some ways that have very strong primary indicators: volatility, entropy, returns. You can also use variance, which is basically volatility, since it is the spread of data around the mean, and that's another way of saying volatility. So those are some of the basic ways that work extremely effectively that you can use to take profit on your trades. Again, why should you take profit early and often? Well, you should take profit early and often because, as I said, it will leave you with more capital in hand with which to trade the next trade, as opposed to sitting in trades on volatile assets that will inevitably turn around and eat your profits. And the only thing that stops you from doing that is yourself, either because you're greedy or fearful or both. So as you always say in alpha trading, take profits early and often. Limit your loss, meaning if you're in a bad trade, if a trade is going against you, get out of it. And do not be emotionally attached to your trades. If you're trading assets you care about, you probably should stop and trade assets you really don't care about, right? That you're not emotionally attached to. Now, does that mean you shouldn't trade assets you like? No. It means you shouldn't trade assets that you are emotionally attached to. If you're going to catch feelings about trades, don't trade it. Why? Bots that run the majority of trades, they don't have feelings. They don't trade with emotions. They trade the maths, just like we do at alpha trading. The beauty of the tools at alpha trading is you don't have to calculate the maths yourself. The indicators do that for you. They show that to you. And as long as you know how to read the indicators, you know what the maths are. They're pretty standardized levels, pretty standardized numbers, and that's why the tools are easier to use and better to use, in my opinion, than any other retail lagging indicator tools. Because the tools at alpha trading are leading information tools, meaning they're not lagging information, they're leading information. What is leading information? Leading information is information that tells you about the probabilities and statistics of the current and future candles. Lagging information, which is typically traditional TA tools, only tells you about what has been, not what is likely to be. What would you rather trade with? Tools that tell you what has been, or tools that tell you what is and what is probably going to be? Anyway, That's my how to take profits video. Hope you like it. Happy trading.